Gift your appreciated NVIDIA stock with a huge gain to your elderly Memaw. Since NVIDIA stock has done so well, it seems to be all the financial media is focusing on recently, let's use it as an example. Rather than gifting your stock that's done well to your children, gift it to your Memaw first. A tax strategy that often can be more advanced is something we at Brandywine Oak affectionately call Upstream family gifting. Like always, be sure to involve your wealth advisor and tax advisor before trying this sort of thing at home, as advanced tax planning is not a do-it-yourself project to do in your garage. I want to give my son Maverick $30,000 sometime in the next few years to use towards buying his first car. I put $300 into NVIDIA stock a year or two ago, and it's now worth $30,000. Of course, if I wanted to unload my NVIDIA stock and give Maverick cash, which is what we see people do all the time, I'm going to get hit with capital gains taxes on nearly the entire $30,000. What if instead I open a Fidelity brokerage account for my dearest, adorable 94-year-old Memaw and transfer the $30,000 of NVIDIA stock into her account? My Memaw does not sell the NVIDIA stock, of course, because if she did, she would get hit with the same capital gains taxes that I would if I would have sold it. I also go ahead and instruct Fidelity to set up what's called transfer on death instructions to my son Maverick. All this means in English is, this specific account that Memaw has a name-specific beneficiary, my son Maverick. This beneficiary is who will inherit this account regardless of what Memaw's will says. If Memaw's will says to leave her home and liquid assets to her 3 children equally, but this one Fidelity account has transfer on death instructions to my son Maverick, this account will go to Maverick every day of the week and will transfer entirely separate from her will and other assets. My 94-year-old Memaw sadly passes away 6 months later. At the time of her death, the NVIDIA stock is now worth $36,000. The $36,000 account passes down to my son Maverick. He can go ahead and sell the NVIDIA stock with 0 capital gains taxes. Now, how is this possible? Because capital gains taxes or capital gains are erased or wiped clean at death. He uses the $36,000, by the way, to buy himself a 25-year-old base model Porsche, of course, and he's off to the races. Let's dive in a little deeper and explain how this didn't blow up in my face. If I would have made myself the transfer on death beneficiary, and Memaw only lives 6 months, the IRS would disqualify this transfer. I would get the stock back as she passed away within 12 months of receiving the gift. However, because the stock went to my son Maverick, and he was not the one who gifted the stock to Memaw in the first place, he can receive the stock even if Memaw passed away the next day after receiving the NVIDIA stock. At Brandywine Oak, we help our clients navigate the intricacies of the tax code, and specifically how to apply the tax code to their family situation to do what? To disinherit Uncle Sam.